Hey everyone, welcome back to the show. You're tuning into another episode of the Currency Report, your daily breakdown of everything happening in the world of Forex, from chart setups to macro shifts, without the fluff, without the hype. Today's date is Tuesday, April 8, 2025, and boy, it's been a choppy ride across the currency markets. We're breaking down the big moves from today, what drove them, and what we need to look out for heading into Wednesday, April 9th. If you're commuting, in your office, or even placing some trades, this is your rundown. Let's get straight into it. What happened in the Forex market today, April 8, 2025? 1. Dollar Index, DXY. The greenback came under moderate pressure today, with the DXY slipping below the 104.80 level by the U.S. close. Traders have been pulling back slightly on expectations that the Fed might soften its stance in the next FOMC, especially after that softer-than-expected U.S. factory orders data that hit this morning. Yeah, factory orders came in at minus 0.4%, missing the forecast of plus 0.2%. That sent a ripple through the dollar pairs. 2. Euro to US dollar. The euro found some fresh legs today. We saw euro to US dollar push back above 1.0880, testing the 1.09 zone before retracing slightly into the New York session close. Traders are still cautious though. Remember, ECB Schnabel is set to speak tomorrow, and that could move the needle depending on what tone she takes. 3. Pound sterling to US dollar. Sterling stayed firm, mostly consolidating in the 1.2640 to 1.2680 range. No major UK data today, but expectations are rising that the Bank of England will hike again in May if wage inflation keeps climbing. Watch those jobs numbers coming later this week. 4. US dollar to Japanese yen. Dollar-yen story is interesting. We touched highs near 151.90 during Asia, but New York traders weren't having it. There's this persistent fear of Bank of Japan intervention, especially as we inch closer to that psychological 152.00 level. By late Tuesday, US dollar to Japanese yen was hovering around 151.60, still holding firm, but with nervous energy in the air. 5. AUD and NZD. Aussie bulls came in hot after the RBA minutes, with Australian dollar to US dollar pushing through 0.6620. The central bank's tone was more hawkish than expected, signaling that inflation isn't yet under control. NZD/USD followed suit, climbing to 0.6070 before giving back some ground. Sentiment shift. Here's what traders are thinking. There's been a subtle but important change in market tone. Risk appetite is up slightly. We saw equities rally and gold cool off a bit today. The Nasdaq closed green, and oil prices hit $84 a barrel. This shift tells me traders are leaning a little more risk on. That's worth watching, because if we see sustained demand for risk, the dollar might continue to drift lower. On the flip side, if inflation rears its head again, we're back to square one. Forecast for Wednesday, April 9, 2025. What to watch? Let's talk game plan for tomorrow. 1. US CPI data. The main event. Mark your calendar. The March CPI report drops tomorrow morning at 8:30 a.m. Eastern. Core inflation is expected to tick in at 3.7% YOY. If we print hotter than that, expect a spike in USD across the board, especially against JPY and CHF. But if it comes in softer, the dollar could unwind fast, particularly against the euro and Aussie. 2. Euro to US dollar. Bullish setup if CPI misses. If the inflation print disappoints, I'm looking at a breakout above 1.0915 on euro to US dollar. That opens the door for a move toward 1.0960, maybe even 1.10 by the end of the week. 3. US dollar to Japanese yen. Watch the BOJ. If the CPI is hot, US dollar to Japanese yen might finally break 152. But be careful, Japanese officials have been very vocal. Any signs of verbal intervention will cap gains quickly. I wouldn't be surprised if we see a whipsaw move, spike first, fade later. 4. Pound sterling to US dollar, staying patient cable is coiling. If CPI is soft, pound sterling to US dollar could ride the risk-on wave and test 1.2720. But if inflation comes in hot, this pair is going to sink back to the 1.2550 area fast. 5. Australian dollar to US dollar, keep it on your radar. Aussie looks like it wants to break higher. I'll be watching 0.6640 resistance. If it clears that after CPI, we could be looking at 0.67 in play by Thursday. Strategy talk, how I'm positioning ahead of CPI. For me personally, I'm keeping risk tight. I've got a straddle strategy in place, one long, one short with tight stops, ready to ride momentum after the data hits. CPI days can be wild, so you want to have a plan, not just gut trades. I'm avoiding the yen pairs for now, too much potential for government intervention. But euro to US dollar and Australian dollar to US dollar look like solid opportunities if we get a clean move. Also, don't forget to manage your leverage, no hero trades. News-driven volatility can work for you or blow your account. Be smart out there. Final thoughts. April 8th gave us a taste of what's brewing under the surface. Tomorrow's CPI could flip the script for April. Whether you're trading intraday or setting up for swing plays, the next 24 hours are crucial. If you found value in today's breakdown, make sure to hit that follow button. And if you're watching this on YouTube, like, comment, and share your trade ideas below. I read every single one. We'll be back tomorrow to break it all down and prep for Thursday. Until then, stay sharp, trade smart, and don't chase the market, let the trades come to you. This has been the Currency Report. I'm signing off. Good luck, traders.